Up next, we turn our attention over to the grain markets, and joining the broadcast is Barchart senior analyst Darin Newsom to share his 2 cents on where these markets might be heading. Here's our conversation from Thursday morning. Joining us today to discuss the latest activity in the grain complex is Darin Newsom. He is the senior Barchart analyst. Darin, good to see you. Thank you for the time.
Thanks for having me on again, Bryce.
Well, you and I are visiting on Thursday morning, which follows 7 kind of consecutive days of seeing things finishing lower, but the story's a bit different today. It kind of plays into one of our viewer questions, so I'll just jump right into that. Jeff wrote in asking if we were near our bottom, and I guess we're kind of turning around here on Thursday. What are you seeing?
Yeah, I think we could see a short-term rally in these markets. As you said, we've been under a great deal of pressure. These markets have been under a great deal of pressure, and we're just coming up on an interesting time here in June. It's called the Goldman Roll. Starts on Friday. It's when a large fund rolls its commodity positions from the nearby contract out to the next, and so this can skew activity, particularly if we take into account the fact that not the non-commercial side in general, the investment side in general, has been selling these markets. We saw July corn down 20 cents from Tuesday to Tuesday, which is when the next CFTC numbers for the commitments to traders were pulled. July soybeans were down 40 some cents. So we know the funds were putting pressure on the corn markets, and now there could be some front running ahead of the Goldman activity, and that could certainly have been lending some of the support to both corn and soybeans. We haven't seen a great deal of fundamental change. A national average basis has been holding steady for soybeans during this time that the futures market's been going down. We have seen some strength in the corn basis. Do I think the low is in? No. In fact, I would argue that the seasonal high is in. So what I'm thinking is going to happen here, if we get this short-term uptrend like what I'm expecting, I think it's going to be a selling opportunity. If we've got some old crop to sell, we do that. If we want to price some new crop 2024 production, I think it's going to give us the opportunity to do that as well.
I hate to make you try to pinpoint things too exact, but when you say short-term rally, you meaning a day or two at most at that point?
I would expect, I think it could possibly be nothing more than a day or two. I think it's going to last a little longer, maybe a week, a couple of weeks, get us into mid-June, maybe later June, and then that'll probably top out the markets, I would expect, particularly as more attention, again, with the funds rolling positions, they're going to be paying more attention to new crop, and new crop means weather. And right now, I think the weather is relatively benign. It's a relatively benign factor, though. If we look at the 6 to 10 day, it is for below normal precipitation. So again, I think that's going to give us some excitement here over the next couple of weeks. But in the long term, I think it's just going to be a selling opportunity as we get in deeper into June.
I enjoy reading your commentary from time to time, Darin. You've got a nice way of sizing things up, and you described king crude oil and the king of the ag commodities, that being corn, soybeans, and wheat, being on a similar trajectory since about May 29th. What kind of correlation is there?
Yeah, at times we do see a correlation. The three kings of commodities being gold, crude oil, and corn. And here, recently they all three have been under pressure. But then early this week we started to see some buying coming into gold. It's been a little slower coming into crude oil and corn. We saw crude oil actually finally close higher on Wednesday, and then as you said on Thursday, we've got all three markets rallying. So, the interesting one's been crude oil, with all of the news out there, presumably bullish, with OPEC plus production cuts, with U.S. Department of Energy starting to buy back barrels to fill strategic petroleum reserve. But yet the market has been very slow to move. And this is a seasonal time of year when crude oil, gasoline, and the energy complex as a whole, energy sector as a whole, moves higher. We just haven't seen it. So we haven't seen that big push from a supply and demand side, from the fundamental side, to really get things excited. And get that being the case, market's just been grinding lower.
How about a word on wheat? I'll throw another viewer question your way. Mike wrote in from the Panhandle of Nebraska, says, hey, I seem to miss the best time to sell my wheat each year. Are there particular seasonal trends that he should be watching?
Yeah, the seasonal trend in hard red winter wheat, will start there. We tend to see an early high. Let's say we see the initial seasonal high, say in early June. So this time around, I think it actually occurred in later May. And then the market tends to fall as harvest progresses. The market tends to fall through mid to late August and then start to gain some steam again. So it looks like we're in that time of year where cash hard red winter moves lower. We'll have to see how much pressure it wants to come into the market. But again, it would not be surprising this time of year to see both cash and basis weaken. And then we'll see what happens after that. If everyone does start to get excited about global supply and demand, right now we're simply not seeing it. But if it actually starts to become a reality, then there is an opportunity for both for the winter wheat for the U.S. markets to move higher over the fall and winter.
Wheat harvest underway in Texas and Oklahoma. I don't think any combines rolling just yet in Kansas, but are you hearing any yields come in from those two states in particular?
Yeah, I'm hearing it's scattered. Some of it's better than expected, but I mean that's always an interesting way for producers to report their yield is better than expected, because a lot of times in the southern plains, given the way the weather is and the drought that we still see on the drought monitor, they might not have been expecting much. So we'll have to see how it plays out. Early reports, usually the best wheat is cut or harvested initially as well. So at least early reports are a little bit better than expected. Now we'll see. Once the harvest continues to move north.
What else is Darin Newsom watching? What's important to know here in the early part of June?
The biggest thing right now is the weather. Obviously, we're going to keep a close eye on the weather. Again, if we go back to the corn market, we were talking about earlier. I've been tracking the 2020 to 24 timeframe for both cash and new crop December compared to a decade ago. I don't believe in analogous years because of chaos theory, but there's a similarity in these patterns. And what we saw then was both the cash and new crop futures did not bottom out until September or October, and they had a pretty hard fall over the course of the spring and summer. So certainly something that we have to keep an eye on here. If the market does fall apart because of it better production expectations, we're going to have to use these opportunities, these short-term opportunities to get some sales on the books.
Darin, it's good to get some of your insights. Thank you for the time.
I appreciate you having me on again, Bryce.